All right, welcome to the Rich Dad Stockcast with Andy Tanner. Today we're going to talk about something that I just learned, and that is that you can use the stock market to invest in gold. And what makes it really exciting is Andy was just talking about what's going to happen possibly in 2024 with gold, where it is. And you're not going to believe this, but there's so many different ways to invest in gold that I'd never even heard of. So Andy, let's just kick straight into this. And why don't you explain? Well, let's do two things. What's going to happen with gold in 2024, or maybe we'll start with where it is now, and then how we can use that data in the stock market to invest in gold.
Yeah, and if it's okay, can I plug something? Is that cool if I just
Please,
start out with a plug?
please do.
So there was a time, he's divested now, but there was a time where gold was poised really, really nice, and Warren Buffett went out and made big news because he usually hasn't been a gold guy, and it was one of the best educations ever got from a billionaire that he actually didn't go buy gold, but he bought a pretty significant amount for what you and I would say millions of shares of a mining company called Barrick Gold. And the billionaire stocks strategy he used for that, he took what he's done with railroads, he's took what he's done to acquire, and he has strategies to do this, and you can apply it to gold. So I think it's the perfect time to, I always think about what can I offer people educationally beyond just a podcast. And I have this thing called Billionaire Stock Secrets. And everything we talk about today in terms of, I'll identify which can and which can't. But much of what we talk about today, you could use the same billionaire stock strategies he used to acquire a railroad to acquire a gold mine. And so I'll send you that link, and we'll do a little plug for billionaire stock strategies, because what you're going to find is what we're going to talk about today. You can, if you want to learn how to do it specifically, go to that, and I'll hook you guys up with billionaire stock secrets. So,
And that link will be in the description. And I'm not sure if you mentioned this or not, but Andy's giving that away free. It's a gift for people just for tuning into the show and really listening to the wisdom that Andy's going to give us.
Yeah, 100% no downside clicking on that for sure. So click on that, and you'll learn. And I'll give you a warning though; it'll be a gateway drug to cash flow. It's absolutely a gateway drug to cash flow education, and it will get someone. If you thought you loved financial education, you're going to really start to love financial education when you learn how the billionaires do it. It's pretty hot stuff. So fun stuff. So there you go.
So let's launch off that and using your Warren Buffett story, but then you mixed in using it to cash flow. So how can you cash flow?
Thousand different ways. So it seems that, I named my company the Cash Flow Academy for a reason, because I live in a capital gain world of stocks where everyone's want to buy low, sell high, buy low. That's all they understand. And they forget that what stock ownership is business ownership. That's what it is. And so if I buy a piece of real estate, I have a business. It's got an LLC. I'm in the business of providing a service, and I collect rent, which is how I sell what I'm selling. And it's not a flip the house, buy low, sell high thing. It's a collect revenue by giving value. So, that's the same thing here. And did I show you my cash flow Jack in the Box? Did I show it to you? Look at this. Do you want to see what I got for Christmas? Watch this. Hang on. I'll show you. I got this for Christmas. It is literally a cash flow Jack in the Box.
So for people listening, it's those old toys, where you crank the box.
Cash coming out of the cash flow Jack in the Box. Can you believe that?
That's pretty funny.
$100 bill. So we seem like we can't go through anything without understanding a cash flow Jack in the Box or a golden goose that lays a golden egg. And so let me ask you this. If you thought the price of gold was going up, would you want a golden egg? Because the price is going up. I got this egg. It's getting more valuable. Or would you want the golden goose? It's an easy question, rhetorical question. You'd want the golden goose, right? I mean, think about this.
Absolutely.
Would you rather have 2 ounces of gold, which is a share of the gold in the world, or would you rather have real estate? which is a gold mine. Like,
You
that's
got
a
to take
real
the
estate
mine.
play. I mean,
Right.
for example, if you look at oil, that's a real estate play. It's a piece of ground that produces oil. You can 1031. You want to sell a house and you can't find another house to replace it. You can ask your accountant. You can likely 1031 that house into an oil well and avoid the taxes. So this is a real estate play. And how do you get into real estate? Well, you have to have a piece of paper, a paper asset that says you own the real estate or the rights to the minerals or the rights to the gold, right? Or the lease on the mineral rights. So there's a company, for example, called Newmont Mining, and there's a company called Barrick Gold. And these guys own real estate. Like McDonald's owns real estate. They own real estate all over the world, like huge established gold mines all over the world. And they're mining companies. So how do you get a share of that? How does the average person get a share of that? So before we talk about cash flow gold, let's talk about what the heck's gold's for. There are three things people might try to do with gold. I think one of them is really, really smart. The other is really, really smart. And the third one is not very smart at all. And it's actually the third one that most people try to do that's not very smart at all. So, we always talk about the context before we talk about cash flow. Let me set the context. If you look at a financial statement, okay, you can tweak your financial statement with gold in three ways. And there's always at least three ways to tweak a financial statement. Number one, I could go for cash flow. What that means is I'm going to buy stuff that sells stuff. I'm going to buy stuff that sells stuff. In other words, I'm going to buy a real estate project that sells rent, right? That's what people spend their money on is rent. So I'm producing value to somebody and they're giving me money for the value that I produce. That's called selling things. That's called
All
being
right.
in business.
All right.
So I can buy an asset that produces cash. Okay, number two, the stupid way to do it. I buy a golden goose thinking that the golden goose will be higher in price next week. Said nobody ever. I think I'll buy that goose that guy's low next because I'll bet that price will go up 10% next week. Nobody buys a golden goose to sell the golden goose next week. You own that thing and you feed it as long as it's cranking out eggs forever. So cash flow, in my opinion, is the smartest thing you can do on a financial statement. So the reason Warren Buffett doesn't buy gold is he sees the power of selling things to other people, producing value he'd rather have a company called Dairy Queen that sells blizzards. Those little ice cream things, they serve them upside down to you. He'd rather have a company called Duracell that sells batteries or Geico that sells, because there's constant cash flow coming in. If I buy a brick of gold, there is zero cash flow coming in. Zero, none. And so what people have to hope for is that the price of the gold goes up. Now you're just an idiot stock guy. You're an idiot stock guy because that's what dumb stock guys do. They don't think it's a business. They think it's buy low, sell high. So the first thing you could do is you could buy gold for cash flow. If you learn how to buy the mine, if you make it into a real estate play, right? If you buy the real estate and there's a ton of gold in there, great. Or you could buy it low and okay, so when do you sell it? I mean, let's say gold doubles in price. You're going to sell it now? Well, no, maybe it'll quadruple. Okay, you're going to sell it now? And the problem with capital gains gold is you're eventually going to have to get rid of the asset to enjoy the gain. And is that what you really want to do? Or do you want to accumulate assets? And you have to have a market timing. You have to be this crazy fortune teller technical analyst to know when to sell. Okay, so that's a stupid way to do it. Now, the other smart way, I said there was one dumb and two smart, right? Smart cash flow, dumb capital gain. Okay. Hedge. Now that I can get behind. It's not as cool as cash flow, but I have physical gold, not an ETF, not a stock, physical freaking gold that I can go hold in my hand, and it's heavy and it's fun. They got bar, 10. If you've never put a 10-ounce bar of gold in your hand, man, it's heavy. It's so tiny, but it's heavy. So you can store that in your safe and have your M16s on, or you can go have it stored at Brinks, which costs you money, or somewhere
Right.
like
Does that make it a
Hampton Falls.
liability?
I don't think it makes liability. I think it makes it a cost of insurance. And when you have insurance, that's a cost and you pay for it. What's cool about gold, though, is most insurance policies have an expiration date and you have to keep buying the insurance. You buy that gold once, you've bought your insurance. So when I buy gold, physical gold, my hope is that I've lost that money forever. I hope it's gone. Because the only time I would want to trade that gold in is if I don't have a medium exchange in a US dollar anymore. That the US dollar has died, that they're blowing in the street like a Zimbabwe dollar, and you're doing what the Zimbabwe people, they're mining gold in the hills trying to eat. And so the only good news for gold with a hedge is catastrophe. It's kind of like if your house burns down, well, the good news is you had insurance. Well, if the dollar burns down, the good news is I had gold. So if I ever sell my gold or exchange my gold, that means that we've gone from social to primal, that there's been a collapse of the dollar that's colossal. And some people, I'm not I don't believe in Bigfoot and flat earth and all that conspiracy crap. I think there are evil men in the world that conspire. I don't think there's no conspiracies in the world. There's conspiracy all the time, but I'm not a tinfoil hat guy, just not. But I do see the Federal Reserve, and I see the fiscal irresponsibility, and I see the dollar weakening. So if the dollar is going to weaken, I don't want my money in dollars. I want my money in gold. So 3 things: cash flow, capital gain, and hedge. If I look at my financial statement, I could use gold for all 3 of those. The toughest one is capital gain, because you're trying to be a market timer and you're going to have to get rid of your asset to enjoy the movement of the price, even if you get it right. So if the listeners could just separate that in their mind and actually draw a financial statement. We can do this in our classes all the time at the Cash Flow Academy. We teach you how to take that financial statement and put an asset in it and see how that does one of those 3 things. So, that's the context, I think, of what am I trying to achieve when I'm buying this gold? What am I trying to do? Am I this dude that's just like an amateur investor? Like, I just want to get rich. What do you think? Gold's going up? I guess I'll buy gold. Do you think gold? Give me a hot tip. Should I buy gold? That's the capital gain dude, hoping to buy gold to make themselves rich. But I think one of the smartest things you can do is cash flow. So how do you do that? Own the mine. I mean, it's brilliant. Imagine, Greg, that you owned a mine by yourself. Like, you bought a property, you own the mine, and gold triples in value. You're not buying gold, you're selling it, dude. And you're selling it and selling it and selling it and selling it. And no matter where the price of gold goes, what are you doing? There's always going to be people who want to buy it to make a gold watch or to make a computer component. You're a seller of gold constantly. That means that if you have people coming to your business every month wanting to buy gold for whatever reason, you're collecting the cash. And the higher the price of gold goes, the more money you make. And generally, there's going to be a disparity between like in oil, they call it lifting costs. You're going to pay a guy to go in the ground to dig it out. You're going to pay another guy to refine it. You're going to pay another guy to make it shiny and, hand it out to people. Those costs will be if we have inflation, those costs will go up. But I think there's a disparity when the price of gold shoots, your profit margins do get bigger, in my opinion. So does that make sense? That if you want to own a gold mine, well, you probably are not in a position to go out and buy the whole mine. Well, I'm not. I don't think I could go out and buy a whole gold mine right now. But I'll tell you what, that share and share alike, you could buy a share of a gold mine. And that's exactly what Newmont Mining is and what companies like Barrick Gold are. And they pay a dividend. So I've owned Barrick Gold for I don't know how long. And the dividend's not massive. It's not one of my best dividends. But how many people can say I've gotten paid to own gold where other people haven't? So maybe it's not the most cash flow in the world, But how many people can say that part of my income last year was because I owned a gold mine that sold gold and I got a piece of the profits of it? Who can say that? Who can say that? I have gold in 2 or 3 forms. There's a lot of ways I'll try to help myself with gold. I have my physical gold, which is a hedge. And I'm not trying to make money on it. I'm trying to protect wealth by having it and create a balance. If the dollar goes down, the gold goes up, and it usually goes like this, right? So I have this thing in my balance sheet that keeps it stable generally, right? They're usually inversely proportionally or inverse correlation. Okay, I've talked too much. Questions,
Okay, so
comments?
yeah, we started with we started actually with your free course, billionaire cash or
Yeah.
billionaire stock market, and you brought up that Warren Buffett buys gold in this certain way. And so when we get back, we're gonna go on break real quick. When we get back, I want to really dive into
Well, no,
how Warren
we're
Buffett
gonna
does
get
it, and then how you cash flow it.
well, we're going to get paid. Then we're not only going to get the dividend, we're going to get paid to buy the gold when it goes cheap. We're going to get paid to buy gold. We're going to get
All
paid
right,
to buy it.
when we get back, let's discover that. Let's open that up
We're going
for
to get paid to
myself and the
buy it. I got
audience.
paid to buy it. I got paid to buy it. Okay.
All right, we'll be right back then. All right, welcome back to Rich Dad Stockcast with Andy Tanner, and right now we're exploring ways to use the stock market to invest in gold and even gold mines. And Andy, I'll start with I once tried to invest in a gold mine. You know, Robert Kiyosaki, he does a lot of that, and so I tried to get in on a deal with him, but I was shut down because I didn't meet the qualifications at this time of an accredited investor.
Sure.
And so if I wanted to participate in a gold mine, I couldn't do it the way these rich people do it. I had to do it through the stock market where I could control my own activity, my own participation.
You know, I love the cash flow game because you have the rat race and the fast track. And I think if you were to take that to real life, people on the fast track, you might say in a way they're accredited investors. I had a guy call me, yesterday, for example, introduced himself. First question he asked me is, Andy, you're still an accredited investor? Yes. I'm like, yes. Okay, I have an oil well project. I want to send you a, PPM on it and, blah, blah, blah. And he can't send those out to people who are not accredited, right? So there's like Robert Kiyosaki is going to have stuff come across his desk that even though I'm an accredited investor, I mean, there's also different levels of accredited investors, right? I mean, there's stuff. So he would get stuff coming across his desk that I would never see, right?
Yeah,
I get
of
stuff
course.
coming across my desk that a lot of other people don't see. So let's say a person is just read Rich Dad Poor Dad. They're not accredited. The reason they read it is not because they're rich, it's because they're poor or want to be richer.
Right.
I still want to get in. I still want to get involved at the levels I can get involved in, right? It's all about the cash flow jack in the box. It's about the machine that makes money. That's why it's almost unavoidable on every episode we do. We're going to talk about the golden goose, the egg.
Right.
And people that buy gold are buying the egg, and people that buy the mine are buying the goose. And if the stock or if the gold price goes to the roof, I want to own the goose every time because I want to sell and sell. I want an unlimited supply of gold so I can spend $2,000 and get an ounce of gold, or I can spend $2,000 and get a mine that I own part of every ounce that'll ever come out of that thing forever. Now, back to your question. This is beautiful. How do I think around with the market? And we really don't have time for the whole discussion. We could do 4 podcasts on this. For example, number 1, I sell something called a put option. If you don't know what that means, that's why I do the Billionaire Stock Secrets webinar for you to show you how to get paid to buy stuff. In other words, I do this in 2 ways. I bought Barrett Gold this way as I promised to buy it if it got cheap.
Right.
So I don't pay the price today. I say, I want a 10% discount, let's say. And I know the stock fluctuates. And so every month I'm going to say, I have this amount of money. I'm going to buy this mine. I commit to it and they'll pay me for my commitment, which is exactly what you freaking do in a 401k anyway. A 401k is a commitment to buy equities every time you get a paycheck in advance. You're promising to buy equities, the events, but you pay fees in a 401k. You get out of that freaking 401k, you can get paid for the same commitment by simply selling an option to someone. You say, hey, If you want to protect your investment and it goes down, you're nervous. I actually like that price that's low. You're scared of it dropping. You think a stock price going down is a bad thing for you, and you want a line in the sand where you're guaranteed you can sell to protect yourself from price dropping. To me, that's just a sale. I can't wait for it to buy. So you think it's bad, I think it's good. We can agree. Great. Pay me your money, and I'll promise you to buy it when it gets cheap every time. Give me some money. So I get paid a premium for promising to buy it cheaper than it is today. And if the price goes up, I keep that money. The price goes sideways, I keep that money. Price goes down, I keep that money. Who can say that, Greg? Who can say in the last year that I got paid whether it went up, down, or sideways? When it finally went down, I bought it on sale. And once I got it, I get paid a dividend every time they sell a freaking ounce of gold out of that thing every quarter. Who can say that? You know,
I'm
the
gonna
guy with
guess
a brick
Andy
of,
Tanner.
the guy with a brick of gold in his safe, that's a hedge. So you've got to understand financial education is about what does it do to my balance sheet. Now, here's another thing I'll do. I don't like the ETF for the hedge. I like the physical for the hedge. How do I get the money to buy the physical? I promise to buy the ETF when it drops. Almost always, not every month, but I will sell put options on the gold ETF to promise to buy it when it goes down. And I take that cash, and guess what I do? Buy the physical. So I use the cash by promising to buy that, goes down, I get paid, I use that cash to buy the physical. Then I make a promise to sell my ETF when it goes high. And when I do, I take that cash and I take the difference and I buy the physical. So I have the ETF market help assist me in funding the ownership of the physical because I want the physical there. So we can talk about mining. You can talk about the junior miners play. You can talk about ETF stuff. And if you have an education, you can turn a lot of it into cash flow or into a hedge. I think if you want to go I'll tell you what I would do if I wanted to go capital gain play. I'd go junior miners. I'd go junior miners.
So what is junior miner?
So what a junior miner is you got big players like Newmont Mining and Barrick Gold, like big. I mean, they're massive. I don't even know if Rio Tinto they're more of an iron and copper seller, but Rio Tinto has their share of gold coming out of Kennecott. Robert owns shares in a gold mine that's about 20 miles south of the largest open pit copper mine in the world, and the amount of gold they pull out of that thing pays for the entire operation. All their copper's gravy. Because just the gold they pull out of Kennecott copper mine, just the gold out of the Bingham Canyon mine pays for the whole operation. I know that because when I was a kid, I used to work construction there. And I got friends with the guys that, ran the place. And there's a little town about 15, 20 miles south of that. They just hit it's one of the big gold deposits. It's private. Got to be a credit investor. Robert got in on that, I believe. He showed me they sent him a piece of ore. Yep. From the mine that the rich gold in it. So anyway, the junior miners are not the big operations. They're kind of like you have the Dow, right? And then you got the Russell 2000. Russell 2000s are small cap. They're smaller operations. Well, and it's like exploratory oil. It's very risky because you might hit a dry hole. But if you get exploratory and all of a sudden you drill down a brand new and you found a new oil well, that's the best ROI you'll ever see. So high risk, high reward. Well, the junior miners are kind of like that. It might be not the perfect way to say it. They're just smaller. And they go out and, picture a prospector, going out there, junior miner. But if they hit it, oh, baby, it's just bam, right? It's big risk reward. So the junior miners, let's say you can't get into a private, junior miner. Well, the junior miners has an ETF where you can get exposure to that in the paper asset. I don't like it myself. I know Robert loves the junior miners, and I understand why, but I'm not a capital gain guy. I see the junior miners going through the roof if gold goes through the roof. So if you're a gold guy and you want to play the capital gain, buy low gold and sell high gold, and junior miners might be a way to do that. So you've got ETFs. another thing, there's so much we could discuss. The GLD ETFs is often not misunderstood. There are so many crappy ETFs, and I don't even know that the gold GLD is like, I would much rather have physical gold than the ETF, but I use them for different purposes. And here's what I think is interesting. Was it Santoni or whatever his name is from CNBC? They blindfolded him, and there was this big conspiracy that there's no gold
Oh
backing
yeah.
the thing, and so they say, "Oh, look, their serial numbers are off." Or they have the serial numbers on the bars. It's in England, it's in London, and the gold is in a vault. And what I think is interesting is, in a way, the GLD is a lot like the US dollar used to be, because it was a piece of paper that was backed by real gold. Now, the problem is you can't redeem it, because there's certain baskets of gold, certain sizes of units of gold, that you have to have massive amounts to have it be redeemable. So the average guy that buys 100 shares of GLD, you're right, you can't trade it in for physical gold. It's still backed by it. And there's so many ETFs that are not, like the oil ETF, that's backed by future contracts. And you get into jargon like contango and backwardation and why those suck so bad. And people, that might be above what some people have learned yet, that jargon. But yeah, I love learning about this stuff. By the way, I'm not a gold expert. Robert's a bigger gold expert. You want to listen to one of the two of us? Listen to Robert. He knows more about it than I do. I'm probably saying I'm a student of it, but I do
Well,
understand.
can I challenge you on that though? He's a gold expert, yes, but he uses
For
it
sure.
just to hedge. But when we're talking about cash flowing gold, you might have a run for the money there.
I can tell you that the cash flow from that gold mine is among the lowest in my portfolio. But the reason I also have it is, if the price of gold goes up, that cash flow will explode, because the margins will be so much better. So let's talk about where gold is right now from a technical analysis and a fundamental analysis standpoint. I think technically you have this thing we have called a cup and handle. So let me do this backwards in the TV. I don't know. It's cup and handle, and you're breaking out. Gold has really weird psychological levels. It hit its head on $1,000 an ounce forever. Once it broke through, that old ceiling became the new floor. It's the new standard, right? It's kind of like water. Remember what was your reaction the first time you saw bottled water? Some people aren't old enough to remember this, but we never had bottled water. Are you freaking kidding me? You went to the gym, you played basketball, there's sweat and snot and blood and fluids, and you went to a drinking fountain that was a freaking biological, lab experiment, right? And you just got to drink out of the fountain. And one day we went to 7-Eleven to get a Slurpee or a Big Gulp, and they were selling bottled water. And what did you say? Never.
I thought it was stupid. Yep.
Never going to happen. But one day you went in there and I don't feel like a syrupy Coke or a sugar thing. I just feel like water. Besides, I need a bottle with a lid on it. You know what? I'll just buy it. And boom. Now what you resisted, you now support. Now you support. So you go from resistance to support. So gold went from being resisting. I'm not paying $1,000 for an ounce of gold to, I'll support that anyway. Well, the next level is $2,000. And we hit our head on $2,000 many, many years ago. And it dropped back down. We hit our head on again, dropped down a little, started resisting less and supporting more. And we're blowing through that top now. So I see, from a technical standpoint, I'm bullish on gold right now. Fundamentally, which is the first pillar of investing, fundamentally, you've got a government, a lot of governments are buying it, which would drive the price up. You have rumors of Russia and China buying it, but you also have a dollar that is just in trouble because of fiscal and monetary policy fundamentally. So to me, that gives gold a tailwind. And owning some gold is, what's bad about owning silver and gold, right? What's bad about that? So if you understand it's a hedge, or if you want a cash flow. So right now, as a stock trader, you could you could sell something called a bull put spread that would give you money if it went up or sideways. It wouldn't, or even down a little bit. There are so many ways you can make money on the movement of gold, the production of gold, the sale of gold, junior miners, ETFs, all this stuff. And it's all part of financial education. The problem is people are lazy and they want advice. They don't want knowledge. What should I buy? It drives me nuts. It drives Robert nuts, I think. Someone
Oh yeah.
writes in a question, hey, if you only had $10,000 to invest, tell me what to buy. That's advice. You didn't learn jack. If I say, go buy some new crypto, okay, you didn't learn anything. So understanding, capital gain, is that my goal? Is cash flow, that's the goal, right? Is a hedge. What is the purpose of an ETF? Don't blend that together with physical. It's not the same thing.
Right.
And alt ETFs aren't the same, and the junior miners aren't the same, and the big boys aren't the same. And using options to get paid to buy it is foreign to anybody. Who gets paid? Who generates cash flow from paper to buy physical? Right? And you can do all of these things. So I love that. You can tell I'm very passionate about the discussion. And the message for me is never going to change. Learn more, Andy. I'm a student. I want to know more. And I'm grateful to Robert for this because I never, my grandfather ran a makeshift smelter. And so I was around gold and silver since I was 3 or 4 years old. That's probably why I'm so goofy. We had mercury and sulfur and, freaking liquid metal coming out of his shop, calling the fire department every 3 years, start the thing on fire. OSHA not approved. This was back in the day.
Not at all.
Slag, glowing metal, hitting it with a hammer and seeing that shiny silver underneath the slag. I mean, I was a gold. It's in my veins. But I never really learned about it until started to want to become a real student of it until I met Robert. And that's where I wanted to learn more. I'm still learning more. I'm not gold expert, but I do know how billionaire stock strategies can be applied to get paid.
Right.
Like why you wouldn't want to sell a put right now to get paid to buy gold? Why would you not want to get paid to do it? If you're promising to buy stuff anyway, every paycheck from a 401k, and you're paying fees for that privilege, why would you not want to get paid for those commitments? Think about that. Isn't the promise and commitment to buy something every paycheck worth something to somebody? Think about that for a minute. Isn't making a commitment to buy something valuable? Is there value to someone in your commitment to buy stocks every single month or bond or mutual funds every single month? Is there value to somebody in that? So why are you getting charged when you're producing that value for someone instead of getting paid? If there's value in that promise, why aren't you getting paid for it? So that's why 401ks are garbage, because I can make those same commitments and get paid and have cash flow come to the income column instead of out the expense fees column, and you're for the assets you're going to acquire. To me, it's a no-brainer. That's what the billionaire stock strategies will really show you, and also the hedge stuff. We'll talk about Buffett and Cuban in that class, and you'll learn some stuff from Buffett and Cuban. And right now, where gold's poised, if you can get that financial education and superimpose it on that asset class, I think you can, at a minimum, you'll learn something.
Right. Well, shoot, you'll learn how Warren Buffett does it.
Yeah, I don't know.
But more importantly, you're going to learn how Andy Tanner does it.
Oh, quit plugging me, dude. I get so embarrassed. Look, everybody, just listen to me for a minute. I'm a student like you, okay? I put my pants on one leg at a time. I have failures. I have frustrations. I have successes. I'm just like you guys. I've just done a little more longer, and I do more rants like I just did on the 401k. I don't plan those rants. They just automatically come. We can count on that every time. But I'm grateful to Robert and Kim for introducing me to at least thinking about gold, through the lens of a financial statement, and seeing it very clearly of, am I going to do a cash flow play with gold by owning a mine? I want to own the real estate. I want to own the ground that is producing this gold like a wellspring of oil is. I want to own the ground. If I'm not an accredited investor and I don't have, $100 million to go out and buy a gold mine or 100 billion, then maybe I say, well, they're willing to share. And maybe Barrick doesn't pay the same dividend that I'm used to. And even their calls might not be as volatile, but I can write covered calls. I can sell covered cash secured puts. I can collect dividends. And if that's jargon to you and you don't know anything what I'm talking about, well, start learning billionaire secrets. Start learning them. And at least you'll have your eyes open to make, a better decision than being an advice guy. He just goes blind like buy gold thinking he's going to get rich. Because if you buy a bar of gold thinking you get rich, my question is, at what point will you sell it then? I mean, it went from 1,000. I know Robert was buying gold before it hit 1,000. I know he bought more gold when it hit 1,000. So now that it's at 2, is he going to sell 4, 8, 50,000 an ounce? When's he going to sell? It's a hedge.
Yep. Yeah, he claims to never sell.
It's a hedge. It's a hedge again. You buy that because the dollar sucks. Why would you save money? Don't save money. Save gold. Store wealth.
All right, Andy, we're going to go. But
Awesome.
Thank you. The idea of cash flowing gold is amazing. Obviously, gold as a hedge. But cash flowing gold is amazing.
Gold. This right here is pretty cool. Look, no, you know what this is?
No.
This is pretty cool. You probably can't even see it. It's a commemorative. It's basketball. Commemorative. This is collectors. This isn't bullion. This is collectors. But this is from. This is like celebrating so many years of NCAA basketballs from the U.S. Mint.
Oh wow, that's cool.
So gold, yeah, a bunch of gold, silver, gold. This is just cool Andy, to have.
No kidding, that's amazing. Yeah, we're gonna leave, but everyone, check out Andy's class. It's free. You're gonna learn a lot more about hedging, cash flowing. The two things Andy says are not stupid ways to do gold. So highly recommend logging into that class and learning a little extra from Andy.
Greg, I love our time together. I love our friendship. Thanks for having me each week. And all of you guys, put stuff in the comments. If you have a topic, I can't guarantee I'd know anything about it, but I might. I can share what I think I might know. I don't know. I'll do my best. But if you have topics that you'd like us to cover more specifically, let us know. We'd love to hear your comments. And, the trolls and the bots, I laugh at you guys. You guys are hilarious. It's so funny how people try to ride the rich dad coattail that way. It's so funny. It's like, I lost a bunch of money in this, but I found so-and-so who helped me. I laugh at that stuff, man. But
I'm glad you're laughing. I'm crying a little bit.
No, I don't cry. Our listeners are smart enough they know what a troll is. They know what a guy that doesn't, they know what those messages are. They're not dumb.
All right.
Everyone ought to troll them. Okay. Good. You got a meeting to go to. All right, we'll see.
I do. All right, thanks, man. Bye.
This podcast is a presentation of Rich Dad Media Network.